Eins, zwei, drei. Okay, awesome. We are live to today's panel discussion. Today we would like to discuss again the topic of L2s. We had already, I think, this topic covered 2 times in the past 6-7 months, I guess. But today we have a panel of absolute experts in that respective field. And we would like to discuss Arbitrum Optimism. Coinbase has recently also announced that they will build their own L2 solution based on Optimism. And I think also zero knowledge roll-ups will also play a vital role in this discussion today. But before we start, we should do a little introduction round. Maybe Luis, you can start first. Just briefly explain who you are and what you do.
So thank you for having me. I'm Luis. I work as a product manager, or sort of like the business lead at Shadow Network, which is a threshold encryption mechanism for front running and censorship protection, MEV protection essentially. And this whole project is attached to or is being incubated at Brainbot. I think Jakob will say a little bit more about this. Yeah, I've been working in the Ethereum space since 2016 full-time at Brainbot, and work a little bit on other L2 and other sort of payment solutions. Yeah, and looking forward to the conversation.
Thank you, Luis. And next we have Andreas.
Thank you for having me, Andreas Fletcher. I'm the product owner of Beamer Bridge. Beamer Bridge is a ERC20 bridge that allows for secure and fast token transfers between EVM compatible rollups, which have their base chain as Ethereum. I've been in crypto and blockchain and DLT since 2013.
Thank you, Andreas. And next we have Freddie.
Yeah, great to be here. I'm Freddie. I'm the Ethereum ecosystem lead at Blockdaemon. Blockdaemon provides enterprises and traditional financial institutions the one gateway to the Web3 in terms of infrastructure. Staking, we recently announced our institutional wallet as well. So we're really the one gateway for institutional players globally. And my role there is everything Ethereum related, including L2s, obviously. So I'm very excited to be here because we see this as a very emergent space with more and more L2s coming online, various trade-offs to think about, and we're happy to support them all basically for our customers.
Thank you, Freddie. And then last but not least, Jakob.
Yes, thanks for having me as well. I'm Jacob. I'm legal counsel and head of services here at Brainbot. We are a Web3 venture builder based in Mainz, and we have another office in Berlin. And yeah, we incubate basically Web3 ventures that are mostly at the protocol level, infrastructure projects, and additionally, we also provide services mostly around smart contracts, including smart contract audits and consulting. And yeah, I'm happy to discuss the L2 space, which we are working a lot on with our ventures, and looking forward to the discussion.
Thank you, Jacob. Yeah, first of all, I'm very excited to have with Brainbot, one of our founding members, on board today. So Brainbot is basically contributing and supporting ITSA since the first day of inception, and also great that we have now 4 experts that we can discuss among the topic of L2s. Yeah, maybe we should start with like a little introduction, like why are L2s so important, or why do they become more important now and over time? And I think it has a lot to do with like scalability, with decentralization. Maybe Luis, you could give us a little introduction to that topic and why L2s matter now so much.
Thanks. Yeah, I'll try. We discussed before, and it's not an easy topic, and there's different sort of levels at which it could be explained. But I'll try to go from simpler to sort of more complex or more technical a little bit. So yeah, it starts with the problem, right? We have this, I think, inherent sort of trade-off, simply speaking, in public blockchains, where you want to have at the same time scalability, throughput, latency, low latency, but you also want to have a level of decentralization and a level of sort of accessibility, and the ability for anyone, even with low hardware requirements, to run nodes. And that's a fundamentally difficult trade-off to sort of come around. So that's why I would say, like, top down, this idea of having this two-tiered system where you have the L1 with nodes that have lower hardware requirements versus having on top and some type of L2 where you have nodes with higher hardware requirements that can then process a lot more transactions and a lot more execution computation because they have the better hardware, right? That'll always be the case, and you see this not only in Ethereum, you see this also in something like Cosmos, Polkadot. You see the same sort of concept always be at play. So that's sort of where this comes in. You want to have this two-tiered system, and you kind of need it to allow for still maintaining on the L1 these low hardware requirements while still allowing the higher throughput, right? And then maybe for the solution at a simple level, and this goes for all L2s, be there a plasma or state channels or rollups. I would say you aggregate transactions and you only write a smaller part of it on chain on the L1, right? Maybe you only write the results on chain. For state channels, it's simple, right? You have a bunch of transactions off chain and you only write the final balance sort of on chain, right? For rollups specifically, and you know, rollups are sort of the main focus of L2 these days, kind of have replaced everything else, at least in the Ethereum space. A little more in-depth, how does a rollup work, is you execute all transactions, the sequencer executes all transactions outside of the chain. They write all the transaction data also on the L1. Maybe this is also something that some people don't really know. The L2 writes all the data on the L1, but it's not executed and it's not in the it doesn't write it as a transaction on the L1, but it writes it saves the data on the L1. But the nodes validating this data, they don't have to execute it, right? So that saves a lot of the hardware requirements on the L1. It only goes into the storage sort of space where it doesn't have to be executed. And then to verify and to make sure that the transaction data was actually executed or is actually valid, you have two types of mechanisms. One is the optimistic rollup, one is the ZK rollup. The optimistic rollup essentially has a sort of a challenge, game theoretical challenge mechanism, where if the transaction, you can see the transactions, right, because they're in the storage. And if they're not valid, you can execute them yourself, and you can then challenge the sequencer and slash them essentially. That's the one mechanism, and the other mechanism, ZK rollups, where you use crypto magic essentially to compress the transactions and only write the proof of that the transaction happened on chain. So and all of this kind of allows the execution of and the computational aspect of transactions be essentially free. So anything that has higher computation is going to be like nearly free on Ethereum, which is great. So storage still costs a little bit, yeah, but the execution will be free, yeah, and that allows the throughput to be much higher and allows much more elaborate transactions, while still maintaining the L1 security. Yeah, so I think that's it in a nutshell, sort of. And to compare to a sidechain, maybe briefly, so it's very different in that in the sidechain you're not writing to the L1 at all, right? It's really a separate sort of system, which you have to bridge back and forth between the L1 and the sidechain, but you have essentially no guarantees that anything on the sidechain actually happened from the L1 perspective. There's some nuances to this. There are really interesting zero knowledge sort of type of bridges that can kind of mini light clients that run on the L1 that then can then also verify what's happening on the sidechain. But sort of simply put, that's the main difference between the rollup. So in the sidechain, you're really trading off some of the security, I would say, compared to the L1. And in the rollup, in theory, you don't trade off any security. You just have free execution or nearly free execution, just higher throughput. Yeah, and then I think we'll see later that maybe not all of this is already the case. This is all theory, right? And maybe not all of this is already implemented. Yeah, so maybe we'll touch on this later.
Mm-hmm. I really liked it. Yeah.
I was just going to say that was a great explanation, actually, of a very difficult topic on how to explain it and like how to find the right granularity or flight level for all kinds of audiences, basically. So Luis, hats off, you did a great job. And I was just going to extend this sort of what you said is that there is free computation, but data storage still costs a little bit, and that's really what what Ethereum is focusing on next, if in regards to the roadmap, and it's been called like a rollup centric roadmap for a while now. So we can eliminate computational costs, and that's why L2s are actually cheaper for users to use. The gas costs are cheaper. That's because of the savings in computation, basically. And then with the next hard fork, there's going to be proto-dunk sharding, EIP 4844, on Ethereum layer 1, which is going to provide a dedicated space for the L2s to commit their data to the L1 in a temporary space that is not kept forever like other blockchains, only for, I think a month or so, like to enable the challenge period and some accounting, but nothing more. And that when the rollups implement this, then they will become even more like 10 to 100 times cheaper than they are now. So then they're going to be really, cents or sub-cent transactions possible. And I think that's where a lot of the excitement comes from, because that's really after the elimination of the energy waste of proof of work and the transition to proof of stake with the merge, and now Chapella with the withdrawals, I think the next biggest thing on Ethereum that always people complain about is gas fees. And just recently they exploded again. So having that is the most practical benefit for users, basically, that might not understand all the different trade-offs and something, even though I would encourage to dive deeper into that to really make informed decisions. But really the fact is that, the transactions are usually faster and much cheaper on L2 than on L1.
Mm-hmm. Actually, this is something that, we also like, because most of you guys probably know I'm also working for Rudy Capital, and really since I would say like last year, like when L2s really became so popular, I think especially Arbitrum had like GMX as like the perpetual protocol, which became, I would say, the biggest one in all the ecosystem. I would also say probably right now bigger than synthetics, and I feel like the development in regard to L2s, also that they become cheaper, or that they are already cheap and now even become cheaper, enables so many more interesting use cases. So I think this is really something exciting for the whole community, because it just means that more applications will be built in the near future. Luis, also thank you for the explanation. I think this was very good, like the part about like the batching of also the transactions to take away some load from the L1s. You also already explained some of the differences, and you once used the term magic, blockchain magic, I think for the zero knowledge proof. I think this is something that is still fairly new, probably also to our audience. Would one of you guys, or maybe also you, Luis, be interested in going a bit more into detail? What's so special about zero knowledge, and what role will it likely play in the next months or years for the whole ecosystem?
Yeah, definitely. Yeah. So zero knowledge proofs in the specific instance where how the implementation works for rollups is in this form called ZKSync. Yeah, but and I think that's very complex to explain, I think. But yeah, but the zero knowledge proof on the higher level is quite simple to explain if you understand what public-private key cryptography is, right? So zero knowledge proof means you prove that something happened without really revealing the inputs to something. And the public-private key cryptography is the simplest example of this, right? You have a private key that you derive a public key from, and with the public key, you can prove that you own this private key without revealing the private key, right? So it's the simplest form of a zero-knowledge proof. I think per definition, public-private key cryptography is a zero-knowledge proof, right? It's just the simplest one. It's just a type of data that you can prove that you own without revealing it. And then the more elaborate form of this, where you can actually prove that a certain computation has happened without revealing the inputs to the computation, that I would say is the actually interesting part about zero knowledge proofs and ZK-SNARKs. Yeah, and in this case, in the rollup case, it allows us to compress, so to have someone do lots of computation or transactions and allows and execute them, and allows them to create this much smaller proof, much more compact proof that you can then write to the chain and prove that all of this complex computation has happened without actually having to sort of write all this information to the blockchain. What maybe one interesting part of it is that one misconception that some people have is that this has nothing to do with privacy on this level, right? So none of this ZK rollup, none of if you talk about a ZK rollup, is not private at all. It's just about this compression, data compression essentially, and to have a fully encrypted let's say rollup, for example, you would need something different. Most probably, you would probably need even something more akin to FHE, fully homomorphic encryption, or in this direction. Yeah, to actually have private computation execute on encrypted data is not really the same than this. So there's maybe something that people conflate. And this could be a whole different topic, right? But maybe we focus on rollups for today.
Maybe I can add. I like the explanation in like non-technological terms for people that are not so deep into it. One example that I heard a lot was like, if the bouncer in front of a club needs to make sure that you have the right age to enter the club, right? And how do you do that? Basically, you show them your ID or passport or driver's license or whatever, and they look at your birth date. And then they do a mental math, and you got to be over 18 to enter or whatever. And that's the process. Now, if there would be a machine or something that would just answer the question, are you above 18 or not to enter, right? Then the bouncer would not need to look at the whole ID and not do his mental calculations, which could be, if you're just at the fringes of, he needs to know what date is today, and but basically, and that's, I think, illustrates that this mechanism can take away a lot of both the thinking and validation, take out human errors basically, and also compresses, because the answer is just yes or no. It's not the whole birthday, and totally not also your driver's license with your address and name and whatnot. It's all. The bouncer shouldn't care about that, and we heard that this is misused or whatever. So this is something that helps compress the data and simplify the process by some machine or algorithm type of magic.
Mm-hmm. I really like that example. By the way, you know how I always explain L2s? I always say, like, when you go into a pub and you order a beer, basically you have a coaster, right? And the waiter will just put like a line on it, and basically once you want to settle it, the waiter comes and you pay, right? This is the L1 transaction, as long as basically it's just like lines on a coaster. That's basically what all happens on L2. So I really like that. But maybe we can now already go over to Jacob, because I really liked, because this is something that I've heard quite often. I've heard, well, roll-ups are, or like we can see it also, are very successful, and zero knowledge roll-ups will be also an integral part of the whole crypto ecosystem. But then, because Luis touched on that, it's like this privacy. And I've heard like some people say like, okay, this privacy will likely not happen because of regulators. But other people say like, well, we should definitely push for that we have this level of privacy that also Luis, I think, was just describing. Maybe that's a good touching point for you, Jacob. Maybe you can just give us your thoughts on that issue at the moment.
Well, the privacy issue is something that is, as Luis said, not being tackled by the L2 technology per se. So I think there are projects that are trying to solve this for payments and have them be as private as possible in that infrastructure. But the technology of scaling doesn't really help regarding the privacy issues. So we still have on the most rollups like Arbitrum and Optimism and the likes that have the most market share at the moment, they are fully transparent as the native L1 blockchains are, and there is no improvement in that regard, just through the scaling itself, right?
Mm-hmm. And do you think like, or like maybe that's also a question to all of you guys, like, I know you guys are more on the technical side, but like, do you think regulators will have an interest in having that much privacy, or is it something where we should better be suited for the worst case scenario that they want to keep as much data public as possible? Is it something, well, I mean, because you guys are building, right? So you must be also thinking about, okay, how will the future probably look like? And there's probably like two scenarios. Which one do you think is more likely?
That's difficult. I don't think it makes that much difference for projects that we're building, because for the computer it's just an address interacting with some other address basically, and that's totally fine. The regulatory question or the concern of people, of individuals that worry about their privacy, I think that's on a whole another level. That's sort of on the social level. Obviously it's connected to the technology, or technology can provide a solution maybe one way or another, but I think it will always be a struggle for people striving for privacy, at least as much as like cash in terms of payments can provide. And other entities, and maybe those are government or regulators or I don't know what. So that's going to be an eternal struggle. And obviously, as Blockdaemon, we're dealing with large regulated entities, and so we do embrace regulation. And I actually personally also think that we need regulation, because the Wild West is also not healthy. In the long term, it's maybe a good innovation breeding ground and whatnot, but sensible regulation, obviously that's the important adjective there, will help. And actually, as we see now with MiCA and other European regulations, particularly compared versus the US and the staking and the SEC actions that we see there, actually maybe Europe has a little advantage. Let's see if we can capitalize on that. One of the few times I think where we might be ahead in this aspect. But again, it's not really connected to the L2 question, so that's a more generic question. Maybe makes a good separate panel. I think the answer is going to be some middle ground in terms of selective privacy. So basically, that ideally the user gets to choose who to share what with, and then the regulator, as a proven entity, then for I don't know, taxes or whatever they need to look into that, can look at that. But ideally, again, like the bouncer example, just at the stuff that they need to know and not all the details. So preserving as much privacy as possible while giving away as much as needed, I would say. That's sort of what I envision in the future.
I will also keep it with that question, because I know every time, like every question to compliance and regulation is also for me a pain. So
I want to add one little, now that we are on this interesting topic, just to extend one little point on this, because so the really optimistic view on this is what Freddie touched on, this basically that we can have full privacy, but that we can use the cryptography to enable compliance through the encryption, right? And that's the whole goal of cryptography and blockchain, yeah, where you want to have transparency and you want to have an orderly sort of transactional environment. So it's a self-regulatory mechanism, and it's actually in the end is the same goal as the regulator has to regulate, right? So ultimately, I think my optimistic version would be those two will come together, and essentially we will be able to have full privacy, but be able to still prove compliance on the top of the encrypted. So for example, the Tornado Cash tool had this compliance tool built in where you can prove that something happened without revealing. Yeah, so those examples. Yeah. Quick plug for this weekend. Come to Amsterdam. There's going to be it's called ETHDAM. So there's a privacy-focused Ethereum conference, and I think there will be lots of interesting talks. And Alex will be there, just released from prison. Alex from Tornado. So I think that'll be interesting. But yeah, sorry for the
no, it's totally fine.
The privacy stuff.
So if any audience here is from the Netherlands or close by, feel free to maybe also contact Luis. And I don't know, Andreas, you just wanted to say something.
Yeah, I just wanted to throw the ball to go back to track to the L2 topic. I just want to point out the zero knowledge proof mechanism, or the validity proof system that is being used for example, Polygon ZK EVM, does not have to do anything with privacy topics. It's about how can I prove to Ethereum that what was done on the rollup has been done correctly. And in that case, it doesn't have to do anything with privacy or something like that. And that might be a trap hole for people that, they read zero knowledge proof and then they read zero knowledge proof privacy and then they read zero knowledge proof rollup. In this scenario, it's not related to privacy at all. It's just related to how can I prove to Ethereum that what is being done on the rollup is correct. And with zero knowledge proofs, you just have instant finality because you can prove to the chain that what was done is correct, where on optimistic rollups that use fraud-proof systems, the Ethereum chain and the contracts deployed on the Ethereum chain don't know if it's actually correct. And that's why people have 7 days to basically raise a flag and said, no, that was not correct what you have done. This is actually the correct state.
But actually, that's very good that you guys are clarifying that, because I also have to admit that in my head, I always had, okay, ZK has somewhat more privacy. Not always that it's like fully private, like full privacy, but no, it's very good that you explained that. And actually, let's dive now a bit deeper into L2s, because I think we also have there some interesting topics. And Andreas, let's stick with you. You are working on Beamer Bridge, and it's a bridge especially for L2s, right? I've seen like Arbitrum, Optimism, Boba. And this was also something, because I think we have also quite some DeFi enthusiasts currently in here, and the fragmentation in different L2s, right? We have now already 3, 4. I mean, MetaStar was also at some point relevant. Now we also hear about Base. How do you see the future in terms of like that the liquidity will be fragmented, there will be more and more L2s, and what role will be bridges playing in, let's say, unifying all those L2s?
Yes, so being a product owner over the fastest bridge out there, I would argue I don't see any problem in future because we have bridges, and bridges will play an important role in the fragmentation of liquidity. If we wouldn't have bridges, it might be a problem, and there are some reasons for this is, if I bridge up to optimistic rollups, I always have the 7-day window that I have to basically wait if I bridge my assets back down to Ethereum to then just wanting to move it to a different rollup. And now the question is, why 7 days? And maybe we can talk about that, because there's actually no real answer to why 7 days. There are a lot of reasons, but somebody just came up with the 7 days, wrote why 7 days is good, and everybody copy pasted the 7 day. If I have my assets on Optimism and I want to do something on Arbitrum because there's a specific dApp that does not allow me to do it on Optimism, then you need to have a bridging functionality, because moving assets down to Ethereum and then up to Arbitrum is just, number one, it takes way too long, and number two, it's just way too expensive. Especially if I look at small volumes or small amounts of values, it's just going to be way too expensive to bridge it down again, and that's, I don't think, the future or the world that we want to go to. So bridges, very, very important. The problem with bridges is there are different varieties of bridges. You have very secure bridges, you have very unsecure bridges, and you have fully centralized bridges. For a typical user, you don't actually know what type of bridge you're using. And the sad part is that I would argue most of the users, they don't actually want to look at the security models. And if they want to look at it, they would probably not understand it, except if they are actually deep into it. And that's an overall problem with crypto. You know, crypto is complicated. And users want to have really, 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 really cheap transactions. That's why they're using L2s, right? And they don't want to pay high transaction costs to bridge assets over. So they will always go with, or not always, but they will go with the cheapest bridge. And the cheapest bridge is mostly a centralized bridge, or a bridge that has a centralized component to it, because centralized stuff is more is cheaper compared to decentralized ones. And that's why we have L2s. L2s are centralized, and that's why they're also cheaper than Ethereum. Yeah, but I don't see any problems in future regarding segregation, fragmentation, in liquidity, because we have the bridges. Yeah, to answer your question.
I think I take a slightly different view. I think there's, particularly in the medium term, I do see this as a problem, because people just don't know where stuff is. Like, I have to admit, like, I don't even know on what wallet do I have on what chain, what assets or something. Now, there's certainly going to be improvements in terms of, you know, the wallet, and maybe AI can help you in, you know, determining if you want to do something, and then they quickly bridge it over with Beamer and other solutions. So yes, I do see a future in the multi-chain future, which we are, you know, full steam ahead on, basically in L2s. Even though that's all in one ecosystem, it's still multiple chains, and you have to understand where it is. And if you have a smart contract, is that also deployed on your L2? And, you know, there's all sorts of complications that can interfere with the user experience. So I do think it does, let's say, create some friction and interoperability issues that might be overcome or not. And bridges obviously play a large role in you know, eliminating that or making it better. But there's what I found interesting is that, you know, with bridges, and Andreas was mentioning the different types of bridges, and without going into those, but these are similar to the problems that we see in the L2 state of things as they are right now. Like Lewis was referencing that, you know, this is all great in theory, but where are we in practice? Like, is this fully fledged out? And the different technologies and different implementations of optimistic or ZK rollups are at different stages. And my favorite resource there for people that want to read up on the status is L2beat.com. That's a great website which compares not only the total value secured, so, you know, how much market share these rollups have, but also their security assumptions that people need to trust. And I think that's a very valuable topic to talk about. So, you know, it depends on how can you validate the state? How is your data available? Is the smart contracts or the rollups, is it still upgradable? Which I believe most of them are, which basically allows the team to, you know, upgrade to a version where they can pull your funds, basically. A lot of talk has been done about decentralized sequencers, which is pretty much like a not exactly like a centralized bridge, but in terms similar. They could censor you. That's the main problem with L2 sequencing, or they could fail, which basically means they censor everything and nothing works anymore. So it's also a reliability issue, and the validation or the fraud proofs, or does that work or not? So there's various aspects of this, and it's probably going too deep into the weeds of things, but people should be aware that there is risks involved, and that the L2s are not there yet at this promised land of the future where everything is decentralized, scalable, and secure.
The question is, if everybody that uses rollups would know the security model of rollups, would we actually still see so many users on rollups, or would they be freaked out by what still is missing and not use rollups?
But that's true for DeFi as well, right?
That's true of DeFi. That's
just
true of
ETH
everything.
to some
Yes.
for nothing.
Yes.
And for
Yes.
Binance, and for Binance Smart Chain,
Yes.
or a side chain. Yeah.
But Friday, one thing regarding the usability and UX, etc. So crypto's biggest problem, UX. This is something that I believe bridges need to tackle on. That's one thing that we're focusing on Beamer very, very heavily on, is that people shouldn't care on which rollup or on which chain their assets are. They should just care about the usability of their assets, and allowing protocols to shape in a way that for the user, they still have a security model in place that guarantees that if they do something on chain, transfer something, and it doesn't matter on which chain it is, it can be bridged in a secure way, is definitely one of the most important things for us at Beam. And I think also for other bridges.
Yeah. Just to give a little feedback, because I recently bridged some assets and it was very easy. I think there was enough liquidity on either side. But I remember last year, it was bear market. It was around the FTX crash. I was trying to bridge some assets and I wanted to bridge some DAI. And I don't fully remember on which chain, but there was literally no liquidity on the other side where I basically wanted to bridge to. And maybe because this, I think also something with like the bridges, you still need like the funds, the liquidity available on the bridges. How is this like topic for you, Andreas, where you think, how will it look in the future? Also for like bigger institutional players, maybe.
Yeah, it's a tricky question to answer, because if you look at the bridge volumes, you can see that you have one-sided liquidity on some of them. Especially if you look at a lot of bridges that allow bridging from Ethereum to the rollups. A lot of bridges actually use the native Optimism or Arbitrum bridge. That's why it takes 20 minutes to bridge up. And this results in one rollup having more liquidity than the other one. And what bridges then basically do is they just use a different bridge to bridge liquidity to the other bridge, which fixes the problem, but it's actually not a solution to the problem. Or maybe it is, depends on who you ask. Or the liquidity providers that provide the liquidity to the bridge would need to move assets down to Ethereum and then move them over to the other rollup. But then again, for Optimistic Bridge, they have a 7-day period, and that's basically 7-day period where you have dead capital locked away that you cannot facilitate, like you can't use. On ZK rollups, it might be definitely better, but the overall solution to rebalancing liquidity on rollups is also something that's probably going to be worked on more and more and more. But that's not going to be user facing. So users most likely won't realize that this is being done. This is just protocol performance optimization topics.
No, thank you, Andreas. And then actually, Freddie just touched on it, and I think this is definitely something that we should also speak about. So sequencer, I think this is something new. I think, Luis, you have already explained that fairly well. As far as I understand right now, there's only one sequencer, for example, on Arbitrum. the sequencer is centralized and it's managed by the Arbitrum Foundation. In the future, the sequencer is supposed to be decentralized. However, each individual part of the sequencer needs to be whitelisted by the Arbitrum Foundation. Is that statement already correct, or am I already saying something wrong?
I'm not sure if they would. We don't know, yeah. But ideally, the sequencer is permissionless in the future as well, yeah.
Okay, so because I just saw that in a talk of the Arbitrum CEO, because I prepared a little bit for this panel discussion so that I'm not too uneducated. And I remember there was one question.
Yeah, I think what you're referring to is the fraud-proof system that Arbitrum has in place, and Optimism does not have a fraud-proof system implemented yet. Arbitrum does have it implemented, but the validators that check the fraud-proof system, that is whitelisted. So there you have to be whitelisted to actually take part in the fraud-proof system. And then the question is that then actually secure or not? Because you can just whitelist people that you don't want to challenge something, for example. Yeah, but that's a different question.
Okay, then I will phrase it in one question. So we have the validators which check on the transactions. We have the sequencer, which is mostly just ordering the transactions, and you also mentioned before, Freddie, the smart contracts which can be upgraded. So I would say these three topics, like the upgradability, the sequencer, and the validators, where do you guys see major risks? Because we were also just joking about if the general public would know, okay, who is able to do what on L2s. So where do you guys see the primary risks?
Go ahead, Frederick.
Well, I was just gonna say, I think the problem with those risk factors, they add up, and the security is only as good as the weakest point. So it doesn't matter if you have decentralized sequencers and fraud proofs and whatnot. If the contract is upgradable and the team would upgrade it, or some malicious entity would upgrade to something different, then all this is obsolete, right? So that's why it's really, I don't think it's a sensible discussion where is the biggest risks or something. I mean, we obviously as Blockchain, we want to support the decentralization with our infrastructure in either validator sequencers or whatever else. So that's fine. But again, there's so many aspects and vectors to think about. Then I don't see this as a sensible, differentiation between the risks vectors, basically. But also I have to say that for some ordinary use cases, if you're not talking, huge amounts of money, then maybe you don't need all that much decentralization, and you might not need, all, the purest form. And there's good reasons why, for example, smart contracts are upgradable in order to, as the space evolves, new features can be added and, problems can be solved. So there's also good reasons for having those. So that's always a trade-off decision, and that's why I think ultimately it comes down to educating the user in what risks are there, and also making or sort of balancing that with the UX. I'm very much in favor of simplifying the UX, but that usually means you're abstracting away some of the complexities and the trade-offs that make up for that decision. So there again, there's a trade-off that every individual person needs to find. But again, I remember back in the old days on XDAI chain, now called Gnosis chain, we had the burner wallet, which was a great throwaway wallet that you can just create on your phone. But it was explicitly meant to only hold an amount that is equivalent to what you hold in your cash wallet. Because it's not secure, you couldn't really back up the seed phrase, or if you lost your phone, it was gone. But people don't worry about security with the money they have in their pockets, basically, which gets increasingly less because we only have cards anymore. But you know what I mean. So that's really something. And obviously, we're dealing with entities that are securing billions of dollars, and that's totally different security considerations than someone that is playing with $100 on DeFi on some L2.
I want to throw Lewis a ball and go into detail of a problem of rollups. Yeah? So I think centralized sequencers are bad, but I don't think that they are a problem. Like they're still a problem, but if they would implement the fraud-proof systems and validity-proof systems in a correct and feasible manner, then it would make it much better. The problem with sequencers is also, and that is I think really bad, is that they should only care about including transactions, but do they actually do that? Do they not maybe care about what type of transactions are included? And we can see that on the Ethereum chain, which is supposed to be super decentralized, but on Ethereum, you can see that over 50% of blocks are censored. And they are censored because a lot of validators are companies or entities that have to follow regulation, and that's why they cannot include transactions that are, for example, OFAC non-compliant, etc. So it's not even that they don't want to include them, but they basically are forced to not include these transactions or to have a setup that would, in theory, censor transactions. And if we take an example of Base, so the Coinbase rollup, Base or Coinbase as a legal entity that focuses on centralized exchanges can tap into the full liquidity that they provide on Base, and they can basically, and that's Coinbase is the only entity that can actually do this because they would be able to enforce including transactions into the block of the sequencer, can provide on the front end of Coinbase liquidity and basically the full market of the rollup, and allow for users to interact with the liquidity on the rollup and force that those transactions are included in the rollup. And that's why Shutter is such a nice idea, because with Shutter, if rollups would implement Shutter, and you can see this on Gnosis chain, where Gnosis chain is in the progress of creating a Shutternized beacon chain, the block builders or the people that deal with the transactions will not see what is actually being included. They just see that something is included, which then actually leverage their position of just being the technical service provider and not doing any business decisions or regulator decisions, and just being the pure technical service provider for this chain.
Mm-hmm. Awesome, you took my my line from me. Maybe just to extend or reformulate take it one step back to these, I would like go back to discussions. What are the risks and what are the sort of potential downsides that we currently see with L2s? I would say even in the world where we have implemented fraud proofs and we have all the checks and balances in place for the current sort of L2 designs, even then we would still have the issue of front running, a sequence of front running, MEV, and the MEV is basically that, and then also censorship, and we would say real-time censorship, because because it's a centralized sequencer, so in theory they can just say we don't want to include this transaction. And maybe to dive, and those are related, yes. For if you can reorder transactions, you can front run, you can also censor transactions. Yeah, and maybe just a brief explainer here. What is front running? Maybe if you in the audience, if you maybe are coming from the traditional finance world, you might know what front running is. That just means on the simple level is you have some order of transactions and you in an exchange, right? And you jump in front of the order in some unfair manner. So back in the day, in traditional finance, this was possible due to sort of how the exchanges were connected, and you can see orders before they're being executed, and that way you can jump the queue, essentially jump in front of the queue and leverage an unfair information advantage to your advantage, and essentially front run a user who then receives a much worse price. And in crypto, it's different, and it's even more crazy. So in the real world, it's illegal, right? You're no longer allowed to do front running in this way. In crypto, it's just a crazy place because A, it's not regulated, but B, it's much more elaborate because of the atomicity of transactions, that you can combine transactions and you can do much more elaborate arbitrage and crazy transactions, extract much more value in one front run, essentially, one arbitrage. And because we have things like flash loans, so you can borrow an unlimited amount of tokens as long as you pay them back at the end of these atomic transactions. And again, that allows you to do much more elaborate, much bigger front runs and MEVs, minor extractable value, what we call it. Yeah. And the funny thing, one funny thing is that it should be solved. Right? Blockchain solves this transaction ordering problem in theory, and it solves it, the censorship and everything. It doesn't solve it for the time frames that are sort of shorter than 10 seconds, and that's where we see it. And especially now coming back to L2 rollups, we see it there, especially because you have a centralized sequencer. So I think there it could be even worse. Right now, we're not really seeing a lot of front running in MEV and rollups because you trust the sequencer not to extract MEV and not to front run. But that's not a really sustainable setup. You don't want to trust the sequencer. That's the whole point of blockchains, is you don't trust the sequencer. So this will probably be an even bigger issue. And similarly, the censorship. One maybe important distinction here, again, censorship the rollup is in theory censorship resistant because you can always force through the transaction on the L1. So on a longer time scale, it is censorship resistant. But on this smaller time scale, and this can sometimes matter really because trading happens fast, right? On the smaller time scale, it's not censorship. So we would call it's not real-time censorship resistant, essentially. It's censorship resistant, but not real-time. And yeah, as just briefly, as Andreas said, one way to combat it would be with an encrypted mempool. So you encrypt transactions and have them be signed by the block producer. So in this case, the sequencer, while they're still encrypted, such that they don't even know what's in the transaction, so they can't censor or front run. And to make this safe and to sort of decentralize the encryption and decryption process, that's where sort of Shutter would come in and can use threshold encryption or threshold decryption to decentralize this encryption and decryption process. And we call these the keepers, and they collaborate essentially to generate these keys. So yeah, that's one solution, and we're working on this with Gnosis Chain, as Andreas said, and also we received a grant from Optimism, the first stage of sort of researching, evaluating whether it could also be an option for Optimism. And just to throw in some other bits for someone who wants to dig deeper, other MEV sort of frameworks or solutions, right, on L2 or would be, for example, MEV auctions. So you auction off the sequencer role, and thus you the one who owns the sequencer role for a certain time, they're allowed to extract MEV. So you create a market around essentially indirectly you're selling off the MEV or creating an auction around it. I think that's a very interesting one. Also something proposed by Optimism, also very complementary and works together with Shutter. So those could be combined. You can use Shutter to remove the front running and then use the auction mechanism to auction off the remaining MEV with the back running essentially. And another one, maybe also interesting, I think that's more so currently discussed on the ETH L1 level, is MEV burn. So you burn the MEV, destroy it, and thus you give back to all ETH holders because you reduce the supply. Yeah, and there's other solutions, and obviously one thing to look at is Flashbots, who are the most active probably research collective and have the most software out there in terms of MEV boost and MEV share and all this infrastructure that organizes and makes a market for the MEV. Yeah.
And we should definitely do a separate episode on MEV there. There's also a lot of things to unpack on that dimension.
I'm just realizing that too. By the way, if anybody of the audience interested, I know that Flashbot has a YouTube channel, and I can really recommend it because this is also where I found the Arbitrum video. But I would like to push the topic also again to Jacob, because we were just hearing censorship and MEV, and I would be also interested to hear his take on that topic.
Yeah, absolutely. So the role of the sequencer is definitely a very interesting one from a legal perspective, and yeah, we are currently in this phase where the rollups are not fully fledged yet and have not reached the stage they want to reach. So I think the upcoming regulation, especially in Europe with MiCA in the coming sort of around 18 months, actually incentivizes to push for this further centralization, because a role like a sequencer could be prone to be regulated as a kind of crypto asset service that is definitely on the table, depending on the infrastructure that they're providing. What comes to mind first would be the crypto asset service of custody, obviously, and you definitely will want to avoid that as a sequencer, because if you were a provider of crypto custody, then you would have to apply all the things like AML, KYC, and all of that regulated kind of overhead that you would have there. So you definitely want to avoid to be that as a custodian, or other things that are regulated as crypto asset services, such as execution of orders or reception and transmission of orders for crypto assets on behalf of clients. So you definitely want to have a role where you're not contractually obliged to users of the rollup. So you want to be sort of just an infrastructure provider that is no service obligations towards the client. So that requires sort of a distance and the remaining kind of self-sovereignty or self-custody aspect of the infrastructure. So I think it's important that users should always have the chance to at least pull out of the rollup, even if something is broken, right? Because otherwise you have this aspect of losing users' funds, which would be definitely the worst case scenario there, also from a regulatory perspective. So I think that's an important point where the regulator actually is on the side of the user, basically making sure that the infrastructure is not being done in a non self-sovereign way, and has the opportunity of censorship for the infrastructure provider. So that's an important point there, because otherwise, the regulation would not be compatible with the idea of a rollup if that were the case, right? So they cannot comply with the regulations that would be upcoming in MiCA. I think that's an important point where we see the regulator actually having the same things in mind. I think it has been said before in this panel. Just want to re-emphasize that, and I think the sequencers of the most used rollups currently are well aware of that and have measures in place. But you definitely, as a user, have to check it for yourself currently, because it's in the details.
Actually, I think it's always very easy to bash the EU or other entities, but sometimes it's also good to point out the positive things. And I think with MiCA, we really have something where also many other jurisdictions will take a look at it, will maybe make some changes to it. But I think overall it's a very good law that has been passed now, and I'm also looking forward to see the effects of that law becoming now basically in effect. We have already, to be honest, I feel like this panel was way too short, because I think we could at least extend it for another half an hour, probably even 45 minutes. I would be very interested probably to do like another panel with you guys, maybe at the end of the year, when we have also maybe again some the dank sharding, for example, because this was a very exciting talk, and I could also learn a lot here today. That's also like my advantage, always, that I can ask all the questions that I'm interested in. But maybe to finish the panel today, you guys could say on like your roadmap, like what is like the most interesting thing that you are still waiting for in 2023? Is it like the dank sharding, or is there other developments that you are particularly interested in right now? This would be something that would be now cool to know for me. Like, what is really something that you guys are looking forward for? Maybe we start with Andreas, and then we go through the.
Not even giving me time to think about that.
I'm sorry.
I can jump ahead if you want.
Yes, please.
Me too.
Okay, Jacob, yeah.
Because for me it's easy, and I already talked about it. I think, and it's going to be a boring legal topic actually. I think it was a crucial development now on EU level with the MiCA regulation that has been, basically signed into force. We're waiting for the publishing now, and then that is on the road there, and I think it is a very exciting development on the EU level that the industry can look forward to. And that's for me, like in the next 18 months, as I said, the topic that is most exciting for me personally, from my perspective, from business perspective and legal perspective. Just wanted to throw that out there so the others have time to think about their more fancier technical stuff.
That's a good point and good comradeship. Then, Luis, you're not muted. I will pick you first.
I'm muted on the thing.
Oh, okay, yeah, okay.
But thanks. So I think there's, as you said, we could probably spend another 2-3 sessions on this, because we didn't touch on, I think what's going to be exciting, or what people are talking right now about, is shared sequencing, that you have the same sequencer or sequencer set for multiple rollups, which allows a whole different level of composability and cross-roller MEV and more seamless composability. Another thing that I'm really excited about is, generally speaking, the L2 modularity stack, which allows much more rollups. As I think it's going to be much easier to create rollups. So I think we'll see. Right now we see like an oligopoly of a few rollups. I think in the future we'll see more like hundreds or thousands of rollups, because it's going to be much easier to launch new rollups. And I think we'll also see much more differentiation between the rollups. So might be because they have different properties for different use cases, or they might even be sort of app specific. Or they set themselves apart by having features such as what we talked before, the encrypted mempool for front running protection. Those are some of the things I would say are going to be interesting.
Actually, it was a good point, because I think that I haven't heard before about, like, basically like having one sequencer for different segments. I will definitely read up on that, and then I will buy Andreas some more time and take Freddy first.
Okay, well, I was going to say that the zooming out the modularity, increased modularity of the whole ecosystem, be it on layer 2s or whatever, is obviously very exciting. It also increases complexity, I think, because you then have all those trade-off decisions on all the different levels of the stack or parts of the stack. Obviously, as an infrastructure company, we're happy to support them all and ease the pain in terms of infrastructure needs for our customers. So that's in that sense, this is optimistic for us to support these different chains. But really, what I'll be looking for mostly is also like what makes those chains successful. Like, is it going to be technological superiority? Is it going to be specific use cases, or just having that one app like GMX for Arbitrum or whatever that just propels them ahead of many others? Or is it just user adoption or user access, like Base with Coinbase customer base? So that's going to be super interesting, and on what decides the winner. And I don't think there's going to be one winner, but many. So yeah, but what drives the adoption and the use cases, and hoping for that all of this helps with onboarding, the next billion users for more mainstream things. For that, we also need the UX improvements that matches or even overtakes the increases in modularity and complexity that is created there.
Yeah, very good point. Especially the one with who will basically succeed at the end. But I guess you're right. There will be many winners. And then Andreas, I hope.
Yeah. I don't have a straightforward answer, and I don't have one answer. But the things that I'm looking most forward is maybe like a combination of what's mentioned. Yeah? So a shared sequencer is definitely something that, out of a product owner perspective for a bridge, is something that's going to be very important, because if you have the same sequencer on multiple rollups, would that entity not be the best entity to also validate bridge transfers, for example? I think it's going to be very interesting to see the rollup war between optimistic and zero knowledge rollups. I thought that we would see centralized optimistic rollups, decentralized optimistic rollups, and then centralized zero knowledge rollups, but we're actually skipping the decentralized optimistic rollups. So, like, will they still happen? Will people just give up on optimistic rollups and just do zero knowledge rollups in future? And the third one is Mika, definitely, but Mika more in regards to maybe what impact will it have on not necessarily the financial entities in Germany or in Europe, but more on the adoption in everyday culture. Yeah? So, like, will we see more universities adapting and talking about crypto? Because now it is something that will definitely probably not go away, even though most people had that impression 10 years ago already, but some people are a little bit slower. So, like, will I be able to go out to a bar and drink a beer and talk about crypto and not get headaches about what the other person is saying because he just reads meme stuff on Twitter or something like that, but is actually being educated around that? Yeah, so that would be something really nice. I would want to hope in future.
Good. I think this was a perfect last statement to end this panel today. I want to thank all four of you for participating today, and I will definitely come back to you, because you don't know how hard it is to find 4 experts in the field of L2s. Like, if you just go out there and you just have to look for some randomly, it's super hard to find. So super glad that you guys were here today, and I'm very happy to redo the similar panel maybe in autumn or close to Christmas. For now, I want to thank you all for participating. I want to thank the audience. Ralph and Manuel also write, thank you guys for this interesting panel. And I think this is where we can end it. I wish you guys a nice rest of the week, and talk to you soon.
It was great. Thank you. Bye.
Thank you so much. Bye.
Bye-bye.
Bye. Okay.